million, net decrease of 600,000, 0.6 million from 1920. Jumping forward, I'm trying to reconcile that with the reports within the audited accounts, because they don't talk about that number at all. So I just wondered how they work out. That's the pages 121, 141, 142, 143, and again, that's versus 143 and 144, something else. So that's a question. The other question I'd like to ask is, during that last financial year, there were a number of projects that we were involved in as a council, one of which was a solar farm, which we stopped. And having spent in the region of £140,000, where I couldn't find that in the accounts. And in your view, what were the governance arrangements around that, and how did that satisfy? How does that marry with the governance arrangements that we have in this council for spending that kind of funds? And that is reflected on a number of big projects throughout the council. I just wondered, in your view, where the governance fits in with that, and why you've given it an absolutely clean bill of health.
Thanks for the question. Through you, Chair. So the first question, the 18.6 million, that relates to the council's investment properties. So the properties it's for investment purposes. So in the statement of accounts, page 144, I think, of your agenda pack, has the balance sheet which shows investment properties of 18,560,000. So that's the 18.6 that was referred to. They were valued at 19.2 at the previous balance sheet date. So it's investment properties rather than the operational land and buildings of the council that we're discussing.
Okay, just about on the narrative there above, before that comes in, it doesn't talk about that at all. It talks, I think that's probably on 121, 141 and 142. I can't do it. I mean, it's the trouble with not having paper copies of the things, is that it's very hard to follow it.
I think those 121, 141, 142 are the financial statements.
Yeah.
So investment properties, there's a separate note on investment properties, page 139, page 140. I think that moves on to page 141 as well. So happy to make it clear in our report that that's what's being referred to in terms of investment, rather than.
But I mean, all right, I'll go and find it. So what does it actually say? I mean, I will go and find it now. It doesn't take me too long. Those things.
Whilst you're looking for that, Councillor Brazil, I believe we have Mrs. Cluckle on Teams there, and I believe she'd like to make a comment regarding this. So perhaps whilst you're looking at our, Mrs. Cluckle could make a comment. Are we able to hear Mrs. Cluckle? That's the key thing. Yep.
Thank you. Can you hear me, Chairman?
Yes, I can hear you. Yeah.
Thank you. Yes, this is set out, it's in note 13 to the accounts, which is on page 140 of the published agenda. But there is a table there which sets out the movement in investment properties. We have two investment properties, one at the Lee Mill in Ivybridge and another one in Dartmouth. Members will note that at the very end of the Audit Committee agenda, on the work plan, there will be a specific report on the two investment properties of the council coming to the next Audit Committee meeting, and that will set out all these figures in detail. But in essence, that reduction of 600,000 is attributable to two things. Firstly, there is a net loss from the fair value adjustment. This is where, for the Dartmouth property, initial acquisition costs of that, which were 286,000, were capitalised, which the Prudential Code allows us to do. So you're allowed to capitalise the costs of bringing an asset into purchasing it. So we capitalise those costs. The fair value valuation of that Dartmouth property has not changed over the past 2 years. It remains at the 4.7 million that the council purchased that property for. So that is just the write down of those initial acquisition costs, so the legal costs, stamp duty costs, that sort of thing, for the Dartmouth property. There's also just an adjustment of 310,000. That's just a transfer between different categories of fixed assets, and there was a transfer there out of investment properties and into property, plant and equipment for 310,000. So it's those two items together that is the 600,000 that Jackson is referring to in his report. But there will be a very detailed report on those two investment properties coming to members, which you will see on the work plan. Thank you.
Thank you, Mrs. Buckle. Did that answer your question?
That answers that first question, yeah. And then the second question about the monies that have been gone into various projects that then have been pulled, particularly the solar farm.
Yeah, so on the solar farm, I probably need to go away and take a look where those monies are reflected in the financial statements. As you said, there wouldn't be a separate disclosure on those necessarily. It's not an item that I've got the detail on in front of me here today. You mentioned governance around those decisions. The governance around those decisions I would expect to go through the council's normal governance framework, governance procedures, so whether that would be the relevant committee structure or through exec in line with city delegation.
Well, like you, I would expect it, but it did, as far as I'm concerned, it didn't. So we spent £140,000 of taxpayers' money on a solar farm. I'm not saying that's good or bad. At no stage was that said that that's what we're spending that money on, and at no stage was that given the go-ahead. What happened was that, for whatever reason, whatever powers, somebody in the council took it upon them to spend that money on something, and there is no audit trail about when that money was spent and how it was done. As a one-off, that would be okay, but throughout last financial year, hundreds of thousands of pounds of taxpayers' money was wasted by this council on projects that did not come to fruition. And at no stage were we asked as a council, a full council or executive, whether we would give the go-ahead for those monies. And yet that money has been spent and lost. And I think that is a serious fault within the council and the way that it carries out its financial affairs. And I'm disappointed that that hasn't been picked up by the audit and the auditors, because presumably that's what you're meant to do.
Yes, Mrs. Buckle. Can we come back to Mrs. Buckle on that point?
Yes, thank you. So the decisions around the solar farm were delegated decisions under the council's investment strategy. Those delegations were agreed by full council, and therefore that expenditure was carried out in accordance with those delegations.
Well, I'm not aware of where those delegations came into effect for that. My understanding was that if the council was to spend over and above £30,000, there needed to be some kind of audit trail. What was allowed is that we were allowed to spend money on purchasing properties if we had to do it quickly, but it wouldn't go through the normal audit trail. But on this occasion, that was not the case.
So those delegations were set out within the investment strategy. So that investment strategy had to be approved by council and was. And within there were delegations formally to the executive members in consultation with head of paid service, myself as Section 151 officer, and those delegations had to be obviously adhered to in incurring any expenditure. The investment property strategy was put into place because of the type of acquisitions under that strategy, whereby the council has to act very quickly, and therefore there isn't always time to call a council meeting or call an executive meeting, and that's why the investment strategy was set up in the way that it was. But those delegations did have to be agreed by council and were, so that constitutionally those delegations were then in place.
Well, I hear that, Chairman. Obviously, I'm not happy with it at all. And I've on numerous occasions I've asked for how the scheme of delegation works with our investment properties. That's not been forthcoming to the audit committee. I think that's a matter of urgency. The audit committee should look about how that's working, because I am seriously concerned about how monies are being spent, and that there seems to be a mood within the council that it's their money and they can spend it willy-nilly, in some cases on speculative occasions, and we as councillors are not aware of how that is happening. And I think it needs to be reined in, and there needs to be a proper, audited, democratic decision about how those monies are spent. So I'll leave it there.
Would you like to respond?
Well, all I would say was that scheme of delegation was set out during the time of this council, was set out during the previous council, and as Mr. Butler was explained, it was agreed at full council.
Members, any other questions?
I remember Councillor Brazil churning on about it at that time.
Members, any other questions regarding item number 5 on the audited accounts from any other members? Councillor Taylor.
Yeah, sorry, just a couple of clarifications really. Really it's about the proposed fee from the accountants or does that 54,000 include works that you need to do forward? Because you said there was some works that need to be done going forward. And the other thing is the assets valuation, is that done on a going concern, or is that just the buildings? Because we've got leisure centres and they don't look too healthy at the moment. I was concerned if they go down, does that devalue the whole thing?
So the fee in terms of that final piece of work on the accounts, that covers that piece of work as well. So that covers the responsibilities for 2021. Separate fee for the housing benefit return that we certify that goes to the DWP. It also just goes on that fee page, so that covers that work as well. In respect of the property valuations, so this year the council's internal valuation team did value leisure centres as part of their work, so they do a cyclical approach. So leisure centres were included in that. The way that leisure centres are valued is it's what would it cost to build a modern equivalent of what you have at the moment, or the service potential that leisure centre offers. You're looking to replicate that, how much would it cost, and that's the value that's shown in the balance sheet. The other key assets that were valued this year were the council's car parks, which is looking at an average of income that they've received over a few years to see what the valuation would be. In terms of increases or decreases in valuation, as I mentioned previously or earlier in response to another question, those changes don't impact on the usable reserves of the council, so they wouldn't impact on council tax, as in they're reflected in an unusable reserve, which doesn't form part of the earmarked reserves. Also, any changes in relation to valuation are reflected through the accounts, but don't impact on the general fund.
Yeah, any other questions from members on the audited accounts? No. I would therefore note the audit committee note the audited accounts. Do I have someone to propose that the committee note them? Councillor Rowe, thank you. Seconded by Councillor Taylor. All those in favour? None against. That's unanimous. Moving on to agenda item number 6. I jumped the gun earlier on when I was talking about our reserves. This is the one where it actually does come in, which I think is on page 18 and 19, and it talks about how the council is, as far as its reserves are concerned, middle of the road. And the reason I raise this is because as a council we often do debate our reserves situation, whether we should spend more of the reserves or not. So perhaps if, as you go through that, you could give us an indication of your opinion on that. Mr. Murray, would you like to introduce item number 6 without
Yeah, thank you very much. So this is the auditor's annual report. So this is the first time that this report will have been in front of the audit committee. So this is the new report for 2021 that's come about under the National Audit Office's new value for money guidance. You may remember when we've spoken about this previously that we're required to consider 3 criteria: improving economy, efficiency and effectiveness, governance and financial sustainability. This report sets out our commentary against each of those 3 areas and also includes some commentary around COVID-19, given the impact that that has had on council and life over the last year. The executive summary set out on page 41 of the agenda pack sets out those 3 areas and a little more detail on them. We have not identified any significant weaknesses, so that's the terminology set out in the audit guidance. But for each of the 3 areas, we have identified some improvement recommendations. And as we go through the report, I'll touch on those and the management responses to them. Within our audit plan, we set out our risk assessment, where we reported a potential risk, which again, some of the wording set out in the guidance, around performance reporting. And so that section is the first of the 3 that we cover from page 44 of the pack. So we set out that the council agreed it's current or previous, depending on how you want to look at it in terms of the new one going through the approval process, corporate plan back in 2018. We identified from our risk assessment that formal reporting of performance appeared to have happened throughout 2021. The summary of our work was that we didn't believe that there was a significant weakness in this area because despite that, we identified a number of other means by which performance had been reported through other channels, through the council. So we pick out, for example, the incident management team, informal member briefings, and other areas where we could see that performance was being monitored and was being reported. Through discussions with the council, we identified that understandably there was a change to focus on COVID-19, and that was the result of those decisions. However, in our conclusion, this did still allow members to understand performance within the council and monitor and report that. That being said, one of the improvement recommendations we've made is in respect of performance reporting and the objectives that the council is monitoring against. So at the bottom of page 45, we set out there the judgment on that area in respect of performance reporting. I suppose an area where the evidence that was in relation to some of the waste service, and we can see evidence of that being actively reported and monitored. Through the page 46, we set out some information on benchmarking. So again, the council in normal years would compare itself to others. Slightly different approach taken this year due to COVID-19. We undertake our own benchmarking as part of this piece of work and look at a number of different data sets. The diagram that we've included within our report set out an area where it appeared that the council had a higher spend than other districts or other local neighbours. The bottom paragraph there sets out the reason and rationale for that. Essentially, the council is using all of its allowance for housing benefit discretionary payments, whereby other districts may not be, which is the result of that increase. There were some other points noted throughout the report there. I won't go through the full commentary. Within data quality, we note that internal audit have undertaken reviews and work on this area and raised a number of recommendations for the council to action. We've not raised a separate improvement recommendation in order to duplicate that, but would agree with those recommendations. And as I've mentioned previously, we've already raised an improvement recommendation in respect of the wider performance management arrangements. So data quality falls within that umbrella. If you haven't got good quality data, then you can't manage your report. The other improvement recommendation that we identified in respect of improving economy efficiency effectiveness related to procurement and the Devon District's procurement strategy, whereby We understand that that should be reviewed quarterly by the Devon District Procurement Group, but identified that that hadn't taken place. So there's an improvement recommendation there to ensure that review is undertaken by that group. And the improvement recommendations themselves are set out on pages 48 and 49. So 48 is the recommendation with regards to performance management and that framework, making sure that that's set up and in place. And then page 49 is that review of the Devon District strategy on a regular basis, we suggested at least annually. The next of the three areas sets out governance, and we set out some commentary on risk response and methods to assessing and monitoring risks, so risk registers, risk monitoring, how that was undertaken throughout the year. We also made comment there around internal audit and Devon Audit Partnership, noting that not the full audit programme wasn't completed in 2021, again due to staff being reallocated due to COVID and reviews of COVID grants, etc. We set out on the following page, page 51, some of the changes and some of the budgetary control that was in place throughout the year. Clearly there was an amended budget set in 2021 as a result of the COVID pandemic. We set out within the table some of the options that were discussed and agreed within our amended budget, and then what was actually used throughout the year in respect of that budget. And then we also set out some commentary on decision making and the monitoring of standards. We didn't find any significant weaknesses in respect of the overall governance arrangements, but did identify again some improvement recommendations. So the first being improving performance reporting on the capital programme, so clearly setting out the spend against the profile budget and making that clear to members and the public. Management comments are recorded against each of these recommendations. Second, whilst we were of the view that there was an induction programme and that new members of staff clearly understand the code of conduct, there wasn't necessarily a refresher or a documented approach to say that members of staff remained aware of everything within that code of conduct, so we would suggest that that would be implemented moving forwards. And we also identified that the whistleblowing policy hadn't been reviewed annually, so we would suggest that that is done annually just to ensure that any adjustments or changes to regulation are reflected. So financial sustainability is the third of the three areas. It starts on page 56. We note that there is a small underspend reported in 2021 despite the COVID-19 changes to financing and changes to the council's finances. We've already mentioned reserves there, so we've got a couple of graphs showing general reserves as a percentage of net spend, which shows Southampton slightly below the average of all districts there, and then over the page on page 57, the total reserves. Now clearly this could be skewed a little by the size of the district council and their spend. However, again, Southampton shown just above average there. It's a question that's often asked in terms of what level of reserves is enough. There's no specific guidance released by CIPFA or the sector. Historically, there used to be rules of thumb around 5% of indicators to include as general reserves, and these are reserves that we talk about that can be spent, so not the unusable reserves where we discuss property valuations, not those ones, but the reserves that the council can choose to spend on projects, can use to manage risk or for unexpected events. Mrs. Buckler, as Section 151 officer, annually as part of the budget setting process has to set out a statutory statement on the level of reserves and her view on the adequacy of reserves, so that's done annually as well by Mrs. Buckler. Clearly what this is showing is that you're not a significant outlier of all districts around the country. You're kind of middle of the pack pretty much in both. Sometimes it's quite good to be top or bottom. In my view, with reserves and risk, it's generally better to be middle of the pack than an outlier, would be my own personal view, but discuss that in detail. And then the final page of commentary on page 58 then sets out the budget setting process and also the financial planning and medium-term financial strategy process. we pick out some of the savings targets there as well for 2021 and for future years. We've reviewed the process that the budget and MTFS goes through in terms of the review and approval. One small typo on page 58, apologies. In the auditor's judgment, it refers to an underspend of 122,000. Previously in the report, it's correct in saying it's 112. So it's a small typo there. Apologies, I can update that one. So the improvement recommendation identified in respect of financial sustainability was around the monitoring of savings plans. So we set out some of the detail there. It wasn't clearly reported throughout the year and at year end in terms of savings delivery. We noticed it being reported in the early part of the financial year, but not towards the end. So again, that's an improvement recommendation that we suggested to management to go forward. Pages 60 and 61 then summarise some of the changes and some of the implications and actions taken as a result of COVID-19. But clearly, there was a number of changes to the way the council functioned. Remote meetings being one of them, which we've all been doing or had been doing for a year or so. So this seeks to, I suppose, summarise some of the impact of COVID-19 and what the council did as a result of COVID. Throughout the report, there's multiple references to COVID-19. It seemed remiss not to include this year, given it was such an exceptional year. I probably wasn't going to say much more. The appendices then give a bit more detail on the approach and some of the recommendations that we issue and other powers that we have. Happy to take any questions and acknowledge that this is a new report this year, so it's
Thank you. Do members have any questions regarding the auditor's annual report? Yes.
Just the report makes 6 recommendations. We just have a brief summary of where we are, officers, on each of those recommendations.
Would that be taken by you, Mrs. Emerson, or shall I go to Mrs. Buckle? Mrs. Buckle, would you like to pick that point up, Mrs. Buckle?
Yes, certainly. Thank you, Chairman. So yes, with regards to, for example, the revenue budget monitoring report, there is a recommendation there from Grant Thornton that we reinstate. There's one Excel appendices that we normally put with the revenue budget monitoring reports, which details each of the individual savings for the year, and then says whether or not those savings have been delivered. That was an appendices that we attached to those budget monitoring reports in the early part of 2021. Because of the length of those reports, we didn't do that for the later reports, but we are going to reinstate that if that's a helpful appendix. That's already been done. So the last report that came to the executive had that savings appendix attached to it. With regards to the whistleblowing policy, that is on the agenda for the monitoring officer to update it, and it's on the March Audit Committee work plan for the whistleblowing policy to come back to members and be approved. I think the Grant Thornton's point was that that whistleblowing policy was dated 2016, and therefore that needs updating now for the 2021 arrangements. With regards to the capital programme, we do actually have on the call Claire Scotton, who's a member of our finance team. Claire is our capital accountant, and Claire and myself will look at best practice around how other councils are setting out their capital programme appendices in terms of setting a profiled budget for each of those financial years for each of the capital projects. So, for example, if a capital project spans a number of financial years, which some of ours do, putting some extra columns in the appendices of the capital programme report, so that if members wanted to calculate the actual capital expenditure in a year as compared to the profiled capital expenditure for a financial year, then members could easily undertake that calculation. I think the comment from Grant Thornton was you'd need to look at several reports to be able to undertake that calculation at the moment. As it was, our calculation for 2021 showed that our actual capital expenditure is 5.6 million, was actually 82% of the profiled capital budget for 2021. But I think the point from Grant Thornton is they'd like our capital reports to show that explicitly as to what that calculation is on an annual basis. So we will look at that, because our capital programme appendices are quite large already, and it's how we can include that extra information as well. But myself and Claire will look at that, and that will implement that very shortly. There is a recommendation there around procurement, and our procurement officer has written their response to that, in that will be looked at and implemented in terms of how our procurement arrangements are reviewed. I think that was the majority of the recommendations. Chairman, I apologise if I've missed any. Thank you.
Mr. Powell?
Yeah, just on the other one, which is around the performance management framework, which is one of the first recommendations. That was adopted when the corporate strategy Better Lives for All was adopted back in September. So that's now in place, and we're going through putting the layers in there in terms of setting objectives for officers and smart targets and looking at delivery plans, including targets against each of those actions.
Okay, thank you. Do any members have any other questions on the auditor's annual report? No. The audit committee has asked to note the auditor's annual report. Do I have someone to propose that the committee notes it? Councillor Spencer, and seconded by Councillor Rowe. All those in favour? It's unanimous again. Thank you. Thank you, Mr. Murray, for presenting those two. And we're moving to agenda item number 7, which is going to be introduced by Councillor Bastone, and who's also going to look at the 2 amendments that have been put forward at the same time.
Thank you, Chairman. Apologies, this is going to be a little long, this introduction, but we'll get through it. The Council Constitution delegates approval of the accounts to the Audit Committee, and this report recommends that members approve the audited statement of accounts and the annual government statement for the year ended 31st of March 2021. The report further recommends that the members approve the wording of the letter of representation, which is attached to this report at Appendix A, for signature by the Chairman of the Audit Committee and the Section 151 officer. I'm pleased to say that the 2021 audit has identified only one adjustment to the draft accounts, and this relates to the order in which the valuation adjustment was applied in respect to the Ivy Bridge depot. Capital additions were factored into the 2020 valuation, but were double counted as they were added on top of this valuation in the fixed asset register and draft statement of accounts. A reduction, therefore, of 1.229 million has been made to property, plant and equipment, and the corresponding entry of 1.229 million has been made to the revaluation reserve. This is detailed further in the audit findings report from Grant Thornton, which you've already heard, a separate item on this audit committee agenda. Therefore, the audited accounts for 2021 presented to members of the audit committee today are essentially the same set of accounts which the audit committee considered at their meeting in September, except for the one change on the Ivy Bridge depot and a few disclosure changes. Turning now to the annual government statement, which is at Appendix C. This confirms that the Council has carried out a self-assessment of the extent of which it complies with the 7 core principles of good governance. The grey shading in Appendix C highlights the one change to the draft annual government statement following the completion of the 2021 audit. The annual government statement now makes explicit reference to the code of practice on managing the risk of fraud and corruption. It should be noted that the audit was undertaken remotely again this year due to the impact of the pandemic. This has resulted in some audit challenges, including additional procedures to verify the completeness and accuracy of information provided remotely. In addition to the extended time that has been placed on the audit this year to remote working. Both increased regulatory expectations and focus have meant that officers have spent significant amounts of time completing the 2021 audit. This falls very heavily on the finance team, who have spent in the region of 1,100 hours on both Southam and West Devon audits this year, at a total cost of under 27,000. Around 660 hours of this time was spent on the Southam's audit, costing approximately £16,000. There will be various other officers who have spent time on the 2021 audit, answering queries and providing evidence, a big draw on the council's resources. This is in addition to the time the finance team has spent preparing the 2021 accounts between March and July this year. It is interesting to note that only 9% of audits nationally were completed by the target date of 30th of September. I express my personal thanks to the finance team. The audit is a great credit to them and to the council. Now, moving on to the amendments in the audited statement of accounts for 2021. There are two further changes that need to be made to the audited statement of accounts for 2021. These are set out in papers that were sent to you as an audit committee. The yellow highlights show the figures that have been changed to those published in the audit committee agenda. In considering the audited accounts for 2021 for approval by this committee, I would be grateful if these two changes could also be incorporated. Thank you, Chairman.
Thank you. Any questions for Councillor Asno regarding the statement of the audited annual statement of accounts? Or the amendments, the two amendments that have also been put forward to the committee? No. In which case, the committee is asked to approve the audited annual statement of accounts and also approve the two amendments that have been put to the committee. Can I have someone to propose that? Councillor Taylor, and seconded Councillor Brazil. All those in favour? It's unanimous again. And we move to agenda item number 8, which is the annual Treasury management report.
Slightly shorter introduction here. This report gives an update on the Council's Treasury position as at the 31st of March 2021. The report covers an economic update for the 2021 financial year, an update on the Council's investment and debt portfolio, an update on the South West Mutual Bank, a review of the investment and borrowing strategies, the 2021 capital expenditure and prudential indicators shown in Appendix B. As at 31st March, the Council has outperformed the industry benchmark of 0.8%. The Council has achieved a rate of return of 0.13% against the sterling overnight interbank average, known as SONIA for some reason, of 0.05%. This return reflects the fact that investments were kept very short term due to the pandemic and cash flow uncertainties. The Council achieved a total income of £207,288 for investment interest during the year, £4,288 higher than the budgeted amount of £203,000. As at the 31st of March 2021, the Council held £42.1 million of investments and had a debt portfolio of £14.5 million. Do you want me to go into the amendments as well?
You can do. Do any of the councillors have any questions regarding the annual Treasury management report? Councillor Brazil.
Yeah, thank you, Chairman. Page 249.514. 5.14. I think there's a typo in there, second last line. But if for those that aren't there, there is likely to only be a gentle rise in the gilt yields and public works loan board rates over the next 3 years. As bank rates not forecast to rise above 0.1% by March 2024. As the Bank of England has clearly stated that it will not raise rates until inflation that's sustainable. It should be substantially above its target of 2%. Well, given that the report we had at the budget yesterday was that it's going to go well above 4%, probably in the region of 5%. Is that statement now valid? And also the knock-on effect of that is that given that we've now moved into becoming a property development company, building both a supermarket and a health centre, with public works loan board rates probably will mirror the increase in rates, in Bank of England rates, and the rate of inflation on building materials, etc. Are those projects now still viable with the numbers that we're given, and do we need to have an urgent review of both those projects?
Councillor Baston?
Oh, my opinion is no, because we will have borrowed we certainly have borrowed the sum for the health and wellbeing centre at low rate, so was last December. We did produce a report on that, and I can't remember.
It's fixed rate borrowing, isn't it?
Yeah.
It's fixed rate borrowing.
Have we actually taken out that monies?
Yes.
Yeah.
We have for the health centre.
Yeah.
What about the Aldi?
No,
Perhaps I can bring in Mrs. Buckle.
Yeah, I know we haven't drawn down that money yet.
Only the Dartmouth Health.
So, Mrs. Buckle, do you have any comments to make on this?
Yes, I do. Thank you, Chairman. So yes, if I deal with the Dartmouth Health Hub first, that's correct. We have already taken out that borrowing, and that's shown on page 250 of the agenda. So the borrowing was for just under 4 million. That interest rate on that was 1.97%. And the reason for borrowing at that point in time was we wanted to lock into that interest rate, the low interest rates. The advice from the Treasury Management Advisors. Oh, can you still hear me?
Yes.
Yes.
Yeah.
Can you still hear me? Sorry,
Yes.
I think I may have lost connection there. The advice from our Treasury Management Advisors is that we look at our capital programme, our capital financing requirement, forward look for the next 3 financial years, and if we have projects in there that have a high degree of certainty of going ahead, such as the Dartmouth Health Hub was, that we borrow for those capital projects whilst those interest rates are advantageous. So that borrowing has already been undertaken, and the income that we will get, the surplus income from that project is already built into our medium-term financial strategy for 22-23 onwards. I was only just talking to our Treasury Management Advisors yesterday about PWLB rates, because again, at the moment, they are at quite a good rate. The current forecast from the Treasury Management Advisors is on page 247. So that shows the position of PWLB rates and bank rates as of August. I think the view from the Treasury Management Advisors is that those PWLB rates are not likely to change significantly, certainly not in the next few months. And again, even if those rates did change, the council would have the options of taking out what's called like a blended rate of borrowing. So you could take out your borrowing and tranche it up into some short-term borrowing, some internal borrowing, and some long-term borrowing. So in terms of the affordability of those projects, yes, I'm still very confident of the affordability of those projects, and I am in constant dialogue with our Treasury Management advisors around PDLB rates and interest rates, as we are with Treasury Management as well. So we are also looking in terms of our investments around some green options. So we're looking at things like green money market funds and looking to see if there are any opportunities about whether we could further invest in financial instruments such as that. Thank you.
Thank you, Mr. Buckle. Do we have any other questions from councillors regarding the Treasury Management report? No. I think the committee is asked to note the report. Can I have a proposal that the committee notes the report? Councillor Spencer, and seconded by Councillor Brazil. Thank you. So that's the annual Treasury Management report finished. The final two agenda items, agenda item number 9, which is the Audit Committee Work Programme, is on page 261. We're asked that we note the work programme. So again, if I could have someone just propose that that's noted. Noted Councillor Rowe and seconded Councillor Taylor. And the final agenda item is agenda item number 10, which is that the committee approves the confirmation of the dates of the Audit Committee meetings, which are specified on page 261 as well, with the proposed work plan timetable. Councillor Pearce.
Yeah, Chairman, forgive me, but we seem to have overlooked Appendix C of item 7, which is the annual governance statement, which is really quite an important document. And I'm just trying to catch up and see whether it was one of the recommendations in that report. It was. Yes. Okay.
It's considered as part of the audited accounts.
Yeah, we didn't actually discuss it at all, but yeah, okay. Thank you.
So although we didn't discuss it, are you happy that it was actually, it was mentioned and that it was noted? Councillor Brazil.
Yes, thank you, Chair. Just on the the work programme.
Yeah.
I'm very concerned about the community housing projects that have gone through this council. We had a budget of 1.9 million. That's now down to about 200,000. And I think that there should be a thorough, I don't know whether it's this or overview and scrutiny should do it, but there needs to be a thorough investigation of that. The chief executive keeps saying he's going to do it, but obviously hasn't done it yet. And I think that we need to get that speeded up.
There's a report coming to the executive, I think, in December, is that?
Yes.
I think that's right, isn't it? Yeah. It's on the forward plan.
Okay. That sums it, yeah.
Any other questions regarding the work plan or the dates stated on page 261? At which point I think the committee needs to approve the dates that are on the work plan. Could I have a proposer for approving the dates that are set out as agenda item number 10? Councillor Spencer and seconded by Councillor Brazil. All those in favour? Is unanimous again. So with no other agenda items, I would like to thank Mr Murray for attending today from Grant Thornton and for his comprehensive report. And I would also like to thank Mrs Buckle for attending remotely. It's been very helpful to have you present at the meeting, and I know we've had some technical issues trying to make sure that's achieved, but it's actually worked very well with you there. So I hope you've been able to hear everything we've said. We've certainly heard every comment you've made, and thank you for attending. So with no other items on the agenda, I'll close the meeting at 3:20. Thank you all for attending.